What's good, everyone? Today I'm going to be going over the 3 instant mistakes that most beginners are making. And everyone makes these. I feel even when I'm doing my coaching with my students, they are profitable and they are getting results. But the trades that they're losing, they contain one of these 3 problems right here. So I want to go straight over them and just make sure that all you guys out there who are trading the Forex market, crypto market, any single market that has a financial chart, that you're understanding just the psychology behind these mistakes and you're making sure that you're not doing these mistakes consistently. So the first one is entering at resistance. Sounds basic, but a lot of you are entering at supply zones or resistance zones. So I know you're probably like, oh, I don't do that, but let me show you why you do. And most of the time that you're losing trades is because you're not buying the pullback leg, you're buying the initial momentum phase. And when you're buying the momentum phase, you're far too late, okay? So let me just jump straight into the chart. As we can see here, got the Aussie US dollar. We're just gonna be working off the 4-hour time frame right now. But first things first, what I wanna do is I wanna identify sort of what's going on in the market. So I wanna find this zone over here. Okay, we can see that we've got obviously a touch here. That was the support level, and then it got broken with this major candle here, which caused that downtrend to come down. Now, the interesting thing is obviously we had a rounded retest up to this level here, okay? But a lot of traders, if we put the replay mode on, right, let's just put it on here, okay? A lot of traders would have been looking at this chart saying, okay, we do have a horizontal level, which is right here, okay, on the bodies of these candles. And we had a very, very clean break. But the problem is, guys, even if you've got a clean break of this level here, if we start talking about zones and we look at supply and resistance, we can see that this entire zone here, this entire zone here is a supply level, okay? So that's a massive resistance zone. And I'll map this out, okay, so you guys can see. So we can see we've got a massive resistance zone up here. So even though you did get a breakout, there is still structure that you need to identify to the left, which is causing this to obviously want to pull back. Now, this comes to our second mistake, which is not waiting for deep pullback. So obviously number 1 and number 2, they sort of tie in together, okay? So entering at resistance. If you bought this breakout here, okay, the market essentially faked you out because you did have another resistance level, which was previous support here, which obviously when support is broken, will turn into a resistance level, okay? So what we had was we had a small level break here on the 4-hour time frame. It was a crucial level to break, and it did break with some volume on this candle here, and I'll zoom in. But the problem is that a lot of people would have been buying here saying, okay, it's broken out. We're gonna be targeting the next highs up here. Okay, so that's probably the next target for the Aussie US in some traders' minds. But they're completely disregarding structure to the left, which is a big problem with a lot of beginner traders out there. So we'll leave this resistance zone here. How do you find the deep pullbacks? How do you find an optimal entry level or an entry price that creates a better risk to reward for yourself? Because I guess, imagine this, right? Imagine you entered the position here at the break, okay, and you're trying to catch momentum to the next level up here, okay? So this we'll mark this here as our next level, okay? So that's our next level there. Imagine what you have to do with your risk to reward to get an optimal RRR, so risk to reward ratio, okay? You're gonna have to have your stop here. Now, what the market does want to do most of the time is, and you're not wrong by doing that in any way because your stop loss is below that resistance level here, but that level here is going to get ran, okay? It's going to hunt stops at that level, and we can see what happens after this. But most traders would have been taking this trade here, okay? So they're looking at that break to the left here of this structure. They're waiting for the break, and then they're looking for it to go to the next level, completely disregarding these lows up here, which is just a massive resistance zone. Okay, so that's what I mean by buying at resistance. So you have to always look to the left, find your structure, and you got to think, where is the market going to go next? Where is the market going to trap all of the retail traders that are trading this? So in my opinion, this here is a terrible entry because you're buying at a supply or resistance level, okay? You're far too late to the move. So we'll have a look at that. So to have an optimal stop loss level, you need your stop obviously below these lows, okay? Because that's the last lower, that's the last higher low that was created in the market. That was the initial low, and here is the higher low, okay? So how do we find optimal trading levels off this? What we have to do, guys, is if we see a break and we're still at resistance levels, we need to start using our Fib retracements. Okay, we need to start finding where is the higher low going to be created on this chart. So instantly what I would want to do is I want to pull my Fib, and I would want to pull it from the higher low which was created, and I'd want to pull it from the high that is being made. Okay, instantly what I want to see now is I want to see an entry on either the 70 or the 61.8. Usually what I do is if I've got 3% risk of my total account, so let's just say I've got a, we'll just do this, we're going to say 10K account, 3% risk, which will be $300 risk total. So that's the dollar value that you're risking on this trade. What I would usually do is I'd put a long position on either the 61, okay, and that's my first position for 1.5% risk. So we're doing 1.5% risk on each entry, okay? This is how you split up your risk, and this is how you get optimal entries, okay? This is how I do it anyway. The second one I'd want to do on the 70 Fib or even deeper into the 78.6. So for this example, we'll just use both of these. Our stops can be pretty much below, nice and safe, below this swing low here. We'd even want it pretty much below the body of this candle here. Okay, so both of them are like that. Because if it does break this level here, you don't want to be in the trade anyway. So this is where you want your stops, okay? And we're waiting for the second phase of this chart to come down before we take the trade, okay? So a lot of you are buying momentum, but you're not buying pullbacks. That's where you really want to get in, phase 2. So what we're looking for here is this trade to happen, okay? So we're not going to be buying where all the momentum is. We really want to be buying where it gets scary. We want to be buying where momentum is shifting, and we want to be buying where other people are getting stopped out. Okay, so remember previously I had our entry here and our stop was over here. See how now we're basically entering where other people's stop losses are. That is the key to becoming a profitable trader. You have to change what you're doing. So what we'll do is we'll keep the 78.6 entry and a 61.8 Fib entry. If you don't know how to draw those, you go from the previous swing low to the most recent swing high, and that's how you find your optimal pullbacks. Now, what is important here is if we play this, we will see that the market does respect that. Okay, and it does start coming up. Sorry, I've got to put my targets up a little bit higher. So my first target would be the 27, okay, because we really want it to start heading up into the 50% zone up here, okay, in between this resistance and this resistance up here, okay? All right, and I don't plan these videos, guys. They're very raw, so this is why sometimes we just go back and forth, but we can see that we nearly got our target hit on this. But what the important thing is that we've broken this zone now and we're having another deep pullback. This is okay. At least right now, our stops are safe, okay? We've entered in at the lowest point of the market. We've actually got 2 entries. So we've got 1.5% risk on the right here at 73,540. And we've got our second entry down at 73,375. So we're in for a total of 3% risk, and we're currently up an average of about 45 pips, okay? On a one lot trade, you're up about $800. Okay, so it's very important to understand that you do not want to be buying on phase 1. You really want to be waiting for that phase 2 to occur. Okay, now what we can see in this is that we have another pullback entry. Okay, so if we delete these, if you've already missed the trade, okay, and you want to do the exact same thing again. You want to be waiting for deep pullbacks. So what we can see now is that the market has made its first leg up, and now it's starting to retrace. So what we can do, sorry, I'll just grab this again. So that's the first leg. Now we're looking for our pullback leg. What we want to do is we want to change our Fib levels though, because we don't want to pull it from this low here. We actually want to start pulling it from this low, and that's the Monday open right there. So if we pull it from there to there, we can see that a good entry point, if you were wanting to get into the Aussie, would either be the 70, and we can actually start targeting the higher resistance levels now, okay? Because if you think about it, if you think about market structure, we've had a higher high here, we're looking for a higher low here, and then we want to look for the next higher high, okay? So that could be the next test, and especially this level here, there's a lot of liquidity above this level. There's a lot of market structure that needs to get taken out here. So this level up here is an area of interest for me, okay? So this is your next entry. Now the cool thing about this is it's 2 to 1, even if your stop is below the ultimate low. Now, what you can do, if you've already taken, oops, sorry, I had a little timer on, done. So if you've already had the entry, like I said before, on the 1.5 risk on each trade, then you probably don't want to enter again because you don't want to have too much, I guess, exposure to this trade. Okay, I recommend about 3% risk on each trade. Risk management is obviously the key, guys, to your entire trading, I guess, career. But when you're looking at technicals, these are the 3 biggest mistakes. So number 1 was entering at resistance. Okay, simply entering where people are going to be selling. Okay, you don't want to be doing that. You want to be entering where it's already been sold off and the selling liquidity is thinning. Okay. Very important. Number 2, not waiting for deep pullback. So they tie in together. You can see how a lot of people would have been entering here, but all you really had to do, if we go back to replay mode, okay, all you really had to do was notice that this is resistance, pull your fib from the most recent low to the high, and you had your entry around this level, okay? And we can see that the market does come back, tap you in, and does come up. Now, we are on to the second entry now, okay? So it's very important that we have a look and we keep it clean. So now what we want to do is pull it from the most recent low, which was been made here, to the most recent high. And we can see that we're sort of holding on that 50 level. I don't think that's going to hold in the short term. So what I would be doing if I was someone looking at a trade right now is I'd be looking for a pretty deep pullback to the 70 level, and I'd have my target up here at that 74.90 level, okay? You can have your stops inside the zone and you can make it 3-to-1, but I would much rather have my stops at 2.3-to-1 and have my stops below this level, okay? Because you got to remember, guys, you're contradicting yourself if you believe that this is a support level down here, okay, and your stop isn't below it. So if you're long and your stop is inside the zone, then you're basically going against every belief that you've drawn on the chart. So it's important to have, I guess, a straight line mindset of, okay, my stop will be below the support level here. That's probably even a bit tight in my opinion. So I'd probably come a little bit deeper for a pullback, and you could have your stops here and your target up here. So you've got a 2.5-to-1, okay? Now, we'll delete all this, but it comes back to that third point right here. A lot of people are theory driven, not execution driven, okay? Which means like they're looking for that next golden thing. What they're doing is they're chucking indicators on. They're going like, you know, Bollinger Bands. They're putting on MACD. They're always looking for that next big thing that's going to help them trade, okay? I can personally tell you that this stuff is rubbish and you shouldn't be using this as a beginner trader. The reason is, guys, because you want to understand price action. You want to understand supply and demand. You want to understand where liquidity is in the market, because a lot of beginners simply think the market is just, you know, rectangles and lines. But essentially, guys, the market is hunting liquidity, okay? So there's liquidity above these highs here, okay? And what I mean by liquidity is I mean by people's orders, okay? Stop losses, buy orders, sell orders, buy stops, sell stops. Things like this create market movement because people are putting money into this trade, okay? And obviously it's a zero-sum game of Forex. So if some person's buying, obviously someone else is on the selling end, okay? It's like an auction. So you have to realize that it's not just candlesticks and bars and patterns. It is actually liquidity in the market. And we can see here, like a cool thing that I like using is a volume profile. And it really just makes you realize that this market here is volume driven, okay? It is order driven. It is execution driven. It's not theory driven. So if you're out there, guys, and you're looking for that next theory thing that's going to make you a better trader, it's not about that. It's about getting skin in the game, understanding how the market works, and understanding that those two things. You don't want to be buying at resistance. The same thing as you don't want to be selling at support. Okay, so we're talking on the long side here. Okay, we're only talking long at the moment. So essentially, you don't want to be selling at support. So if we drew a rectangle at this nice little order block here, okay, before this big move up, the reason I've drawn it off that candle is because that was the last bearish candle before we made a void in this market. Okay, so if we go to replay and we put it here, okay, if I saw this occurring, I would want to see the market come back into this zone, okay? Because that was the last time where sellers came in before a void was created in the market, okay? A void is essentially where a market is coming straight down and there's really no structure being built on the downside or the upside, okay? So it's very important to understand that. So what we'll do is, again, we'll draw that again. I'll make it clean for you guys. Just grab that rectangle. So from this candle here, okay, before the move was made, we really want to see price come back into this level, okay? And what we do is we speed this up, and we can see that price comes into that level. Okay, it comes in twice, actually, 3 times, collects liquidity, and is making its move higher, okay? So the most important thing here is that we want to make sure that that we're not selling at this level. So if you are going short on the Aussie US, you really want to be catching it at supply zones. Okay, so it's very, very important that, you know, it's an easy thing. Everyone says that, you know, you want to sell when it's high and you want to buy when it's low, but people tend to do the complete opposite. So if you're out there, guys, you want to look to the left, you want to find structure, but you want to be smart about how you think of it. Okay, so 2 questions to ask yourself: where am I actually buying this? If you were someone who bought on the fake of this breakout here, okay, then you got to realize, okay, it's broken out. Okay, you're not wrong there. It has broken out. We've had a strong 4-hour candle close above that level. But if we have a look to the left, look at all this structure that we've got. Okay, so you have to realize, okay, it has broken out, but there is another structure above it that will cause resistance. And we can see that that has happened both times in this scenario. Okay, so the Aussie, it is still in this uptrend here. Now the reason it's an uptrend is because we've got a higher high, higher low. Okay, higher high, higher low. We've got the higher high being made. So essentially what's going to happen next is we're looking for a higher low. If this low here, okay, is violated, then that's a market structure shift. But I still would not be selling if it broke this, because we've still got this level here, okay? We've still got this level down here to protect us. So that's the thing. Like, even if market structure is broken here, we do not want to be selling until market structure breaks, okay, and then comes back to make its higher low. That's really where you want to be getting your sell. Okay, so I hope that makes sense, guys. They're the 3 mistakes. Stop being theory driven. Start executing on a demo account. Start executing on a live account. Get some skin in the game. Number 1, entering at resistance or selling at support. You do not want to do that because you're basically going against everything that technical analysis, I guess, is. And then number 2, not waiting for deep pullbacks. Okay, you do not want to be buying in the up phase. You do not want to be buying in momentum. You really want to be buying that second pullback phase. That's where you're going to get the maximum risk to reward, and it's going to be safer for you to put your stop losses. Okay, so they're just some beginner tips. 3 instant tips that you can literally just take out there to the market and start changing right away. Nothing too complicated. Just wanted to keep it simple for you guys. So guys, peace out, like, subscribe, comment. Let me know what video you want to see next, okay? See you soon.